This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil, and today I'm going to talk about trying to improve your trading. And I think, if you want to go to another level and you've maybe had some success, but you haven't been consistent, I can tell you the three things that I'm going to talk about today, I think will help you dramatically. Now, I've brought these up in different times, and I've actually done another video about this in the past, but I'm going to take it in a little bit different direction. I'm going to try and give you a little bit more specifics on each area. So let's go ahead and get into this. So I want to start with the number one thing that you need to have to take yourself to another level is a plan. And I prefer a written plan, but at a very minimum, I would suggest that you have a plan for each individual trade you're going to do. Have a written plan saying, okay, this is where I'm going to enter when it happens. If it triggers, and this is where my stop's going to go in advance. This is where my targets are going to be if I'm going to take targets. This is how much I'm going to take at those levels. I'm going to put in that plan whether I'm going to incorporate the market or not in there. In other words, if the market's having a really bad day, does that affect that trade? I mean, for me, for the most part, I do not have, once I have the position on, I'm committed to that position regardless of what the market does. So you have to have a plan. Now, I would suggest having a written plan of action. Now, in my book, Invest Like a Pro, at the end, I have the 2 time frame pinch play. Now, I give a lot of rules at the beginning that you could almost construe as a trading plan, basically saying how many positions to do depending on what time frames you want to play. You got to pick your time frames, and I would suggest if you have the time to start on paper and create a trading plan and do it off a 5 or 10 minute chart and try and get as many trades as you can on paper or on a simulator first. Okay, that's what you should be thinking about. I mean, if I had to come in one day to make money, okay, and I was committed to only trading one thing, which I think is what's gonna, if you're gonna be successful, you have to start with one approach, one trading plan, or one trading signal that you have confidence in that you can go back to over and over and over again if you're gonna have success. If you're all over the map and you're trading divergences and then you're trading breakouts and then you're trading, trading with the trend on a 2 time frame pattern. If you have like 6 or 7 different approaches to the market, I think you're really going to struggle. I mean, for me, if I have to, now this is on a weekly and daily, but you could do it in any time frame. But if I had to come in and do one specific pattern, it would be, this combination that I like, which is the MACD, especially when it's crossing down through the 0 line and pinching. Got good ADX pattern developing right here. We get a rally back to a declining moving average, and then you get your opposing trend trigger here. And, there's a little bit of overrun, but I would find an entry on the smaller time frame. Actually formed looks like a little bit of a pinch play. It would have been a 2 time frame pinch on this one. Certainly on the second entry here after the gap down. So, I mean, there are chances to trade these using some of the approaches that I'm giving you in here. But if you have your own approach, that's fine too. But I'm telling you that if you're going to be successful, you have to have some kind of a written plan. Now, I mean, the second thing I would tell you is if you're going to be successful, you have a plan. And then the second thing you have to do is only take trades from that plan. Okay. So if you have a written plan, but then the market starts doing something you weren't expecting and you're like, wow, I got to do this now. I got to, the market's going up today and I wasn't planning on that. I was looking for shorts and the market skyrockets to the upside. And all of a sudden you start day trading intraday on an instrument that you don't know, trying to make money on the long side. To me, it's just a recipe for disaster for your trading. So have a plan of action. I mean, if that's a part of your plan, then that's fine. But don't go jumping the gun or feeling like you're missing out on something. I mean, yesterday is a great example of that. Looked like the market might be turning. Well, I mean, for me, I mean, the trend is basically down in the time frames that I'm looking at right now. Very hard for me to go look for a long trade. Now, if I'm going to short-term trade, I'm not going to fight the market going straight up if I'm looking for a short trade. So, I mean, these are the types of things where yesterday, yeah, I wasn't all that active. I mean, I have longer-term positions that were up with the market yesterday. But in terms of like looking for a trade to do yesterday, I'm not going to force anything. So, kind of keep that in mind as a part of your trading plan, but also follow your plan. And I would tell you to do one thing, and I think it'll take you to the next level, and that is create a plan with one trading pattern. And again, you can use the pattern from my book. You could use just the 2 time frame pattern, using the MACD and the ADX on the higher time frame, and the ADX and the MACD on the lower time frame. I've shown you this in multiple videos. I mean, you can definitely do that. I even give the rules based on the moving averages and everything, and the trigger using a 40. So any of that can be done if you want to do it that way, or again, create your own. But you have to have one signal and then take 20 trades of only that signal. Okay, that's it. You can't take anything else. And if you can't get yourself to be disciplined enough to take just that one signal 20 times, then you need to you should not be trading, okay? At least not until you can do that. And trust me, I went through this for a long time, and I went through periods where I was trying to get to 20 trades and I get to about 15, and then I would see something going on in the market. I'm like, I'm going to go ahead and take this. I know it's not my plan, but I'm going to go ahead and take this. And then you might even make money in that one trade, but it throws you off completely, and your discipline gets flushed down the toilet. And then all of a sudden some other trade comes up, and then you're off the rails. So if you're going to be successful at this, you got to almost treat it like a business. And I would treat it exactly like a business, a second income, and something that your expenses are your losses, right? Taking small losses are expenses. And you're trying to identify as many good patterns that meet the criteria that you have in your plan. And if you can't find any, then you don't trade. That is still trading. Sitting and patiently waiting for a trade is still trading, okay? Even if you don't have a trade on, okay? Finally, and very important part of this process is logging your trades. You should be able to, what you should do is have an Excel spreadsheet that has your entry, the date of your entry, whether you're buying or selling, buying or shorting, what the price is, what your original stop is. Incredibly important. Okay, that way you can create your R at your starting point. So you'll have that history. Make sure you have your stop, what your original stop is, and keep that in there. And then over on the right, you're going to multiply how many shares you have by your original stop, and you're going to figure out how much you're risking on the trade to start. That's really the only barometer that you have to be able to define how you're doing. I mean, if you look at the wins and losses and you just look at the numbers, it might look like you're doing really well. But if you're risking a massive amount to make a really tiny amount, then that doesn't make a whole lot of sense. So you got to have a good log sheet. And on the log sheet on the right, my suggestion is to put in where you're having trouble. And it can be a 2 to 3 word phrase. One would be like jumping the gun on a trade. It didn't trigger, but I entered anyway, right? That's jumping the gun. Or stock moves up and you didn't want to take a loss anymore, even though your plan didn't allow you to raise the stop to break even. You raised it to a break even. That one killed me for a couple years. Okay. I took a lot of break evens, and what would happen is it would come down, hit my break even, stop, even though it really wasn't a part of my plan, and then it would turn on a dime and go hit my targets. So it took me a long time to overcome that, but the only way you can overcome it is log it in and see it happening over and over again. You're like, holy cow, you do 20 trades and 14 of them you're putting in, raise my stop too quick. Well, you're going to figure out pretty quick. But everybody has their own little demons you have to work through. I don't know what yours is. Yours might be not even honoring your stop. You might have a stop in and it goes down and you pull it. You might say, I'm not going to take the stop because I think it'll come back. That's actually the worst thing that you can do in trading if you're going to be a trader, in my opinion, because you're putting your capital at risk when you do that. So these are the types of things that I think you're going to want to focus in on. If you want to go to another level, you want to treat this like a business, you have to have a plan. If you were going to go into business, any other business, you'd have some kind of a business plan. This is the same concept. At a very minimum, have a plan for each and individual trade that you do with a stop placement in place. Know what your risk is in a dollar format. So if you have 500 shares, you're risking 10 cents. You're risking $50 on that trade, right? That's the way. You just have to know how much you're risking per trade. So let's go ahead and take that to another level for you guys. If you have any questions or comments, go ahead and post it. Thanks.